Well, it's a very good morning from him, and it's a very good morning from me. I'm back online here after a week's absence last week, but that was the right thing to do, I think. Hope everybody's well. I'm Paul Archer, so let's go online. So let's click on there and see how you're all doing, how life is treating you, and all those good things. So welcome back to my mortgage live stream. Got a few things planned for you this afternoon because it is now gone 12 o'clock, and some ideas to help you in your mortgage business moving forward, because a lot's happened in the last couple of weeks. We've had all sorts of things going on, and we're into kind of like autumn now, aren't they? The autumn equinox has occurred, apparently, whatever that means, which means we're into autumn. But for those of you that got cold in the evening yesterday, you probably realize it's already autumn, isn't it, as we speak? Okay, let's get on to our first topic without any further ado, because I want to give you a couple of ideas today. The first topic has to be the big one, the elephant in the room: Friday's budget or mini budget or financial statement, call it what you like. The fact is, the new governors of our country stepped in and they made a splash, or as I call it, the dash for growth is my phrase. A lot of people don't know, but Kwasi is actually a really good guy, and Liz Truss, obviously the new PM. I'm not going to get into politics, but it's all very different to what it was before. And if you want an idea what they actually are doing, then you need to read their book. And I'll share with you a picture of the book. I don't know if you've seen this book. This is just a bit of a Googling I did earlier. Britannia Unchained. So let's give you a bigger picture of the actual book itself. Britannia Unchained is the book. Global Lessons for Growth and Prosperity. Doesn't that sound rather wonderful? Authored by Kwasi, of course, Priti Patel, Dominic Raab, Chris Skidmore, and Elizabeth Truss. Now, you've obviously recognised a couple of names there. And it's all about growth. And so what they're doing is not it's not like new. They have actually published what their plans are, and they're putting them into place, whether you like it or not. That's what they're doing. And it's causing ripples all over the world, particularly with the financial markets. But let's talk about what it really means for us as mortgage brokers. Let me give you a little bit more of a commentary over and above the scaremongers. I've heard the scaremongers this morning. Pounds crushing against the dollar. That's only because the dollar's really strong. American inflation is under control. Interest rates are taming it. They did a good job over there, the Fed. And the dollar is the currency of choice. So everybody's going there to the detriment of the pound. But things will calm down. They always do. Now, let's talk about what Kwasi's done then for the mortgage market. Well, first of all, he's gone for the dash for growth. Their priority is to grow. Now, since 2008, when we had the financial crash, the UK's growth statistics, that's GDP. Let's just put this up on the board so you can see where we are with this one. We're talking here about the United Kingdom economy, is what we talk about. Now, remember, economies are measured by gross domestic product, GDP, which is an illustration of all the transactions going on in the economy. Since 2008, the financial crash, growth has been pretty much static. A little bit of growth here and there. We had massive falls in the pandemic. It's been spluttering along like an old car with bad petrol and oil in it, spluttering along for whatever reason. Productivity's been low, growth's been low. It's all just been like dragging along. And right now we're falling behind other countries such as India, who are due to overtake us. Poland apparently are doing really well, better than us. So we're really lagging behind in the growth statistics. So what Kwasi has indicated is that he wants the economy to grow. He wants us to grow bigger, and he's looking at sort of 2.5% growth per annum. He wants the economy to grow bigger. Because if the economy grows bigger, then everything falls in line. Obviously, we're borrowing more, but borrowing is usually expressed as a percentage of GDP. So it's around the 90% at the moment, isn't it? It's quite a large amount of borrowing, don't get me wrong, which costs money. But it's a percentage of GDP. So if GDP is bigger, the percentage gets smaller. Everything you see is affected positively by economic growth. You've got more opportunities, you've got more employment, you've got everything going on there, and the world thinks we're doing well. There's more capital coming into the UK to offset balance payments. So growth is king, and that's the key. Now, to get growth, what he's done, of course, as we know, is he's lowered taxes. Taxes have come down. So he's doing that to stimulate growth. He's been criticised with not doing the low taxes for everybody equally, and you can't ever please everybody, of course you can't. But low taxes, low state spending, smaller spending. Obviously, there's money to pay on interest, etc., and there is an amount of money the government has to spend, but he wants to reduce that. He wants to reduce that in order to produce more growth, and that's basically what he's done. He said there's more to come as well. If you think about it logically, if you reduce people's taxes and give them more money in their pocket, they're more inclined to earn more money. The richer have been better off, I get that. So they're more inclined to earn more money, to take more risks, more entrepreneurial. Everybody feels good and they're going to work hard, etc. Get this spirit back into the economy. So that's where he's going with it. So no, we know that, and that's what's happening. Now, how does that affect us? Now, one of the things he's done, of course, is he has done the big impact on the mortgage market, and that's stamp duty. There you go, or stamp duty land tax. In England and Wales, by the way, or England, I should say, not Scotland and Wales at the moment. They need to follow on and see what they want to do. But what he's done there to stimulate the housing market, the financial services economy, effectively, he's reduced stamp duty. Again, lower taxes, which encourages more transactions. And you can look up the rates, it's no big deal. But the 2% band has pretty much gone now for everybody. And you start paying stamp duty on £250,000 purchase price. So, the first 250 grand is tax free, stamp duty free. So most people are going to save, if they're buying a big house, of course, about £2,500 in stamp duty. Now, first time buyers have a much higher threshold. Theirs is now at 425,000. So that's all good news if you're buying a property. What that might do is encourage people to buy, whether they would have put it off or not in the future. Actually, we can save ourselves 2,500. That'll help with removal fees and some new furniture. So let's go ahead and do it now. So it might happen. Will it happen with the current economic environment, the recession, possible recession, with the downturn? We don't know. But if this gives the country more confidence and the energy bills are capped, the recession might be very mild. We're already in a recession, by the way. If you look at the numbers, statistically, we're already in a recession. Will we still have the confidence to move forward? I hope so. The big worry, of course, though, is interest rates. Let's put that in there for you. Interest rates, of course, are being affected by all of this. What's happening is the world economy has seen what we're doing, possibly doesn't like it, so they're running against the pound at the moment and buying the dollar and the euro instead of the pound. So the Bank of England may well step in and increase interest rates even further to encourage more money to come into the country. That's what they're trying to do now, to stop a run on the pound. Higher interest rates in the UK, people will put their money into the UK so to get the higher returns, which is a method of doing it, not the best. So we'll see what happens there. Now that's going to affect, of course, people's monthly payments, obviously. Is that a big deal? Well, yes, it is. I mean, 4.5% mortgages, 5% mortgage rates are much, much higher than they have been since 2008. But hey, guys, interest rates have been high before and people actually survived. They have to get used to monthly payments, of course, being a lot higher. But we've had stress rates in the past which have measured people's ability to afford these things. I don't think it's like doom and gloom as people think. I think it's just business as usual. We've had low interest rates, artificially so, but a slightly higher interest rates, slightly higher inflation starts to make the economy boom along. It's a little bit like those defibrillators we see in the post boxes or the telephone boxes nowadays, isn't it? Defibrillator. I've never used one, but you put the thing on the person and stand back, everybody. It gets the heart going with a burst of electricity. That's what Kwasi's done. Dash for growth, get that economy booming again is what they're trying to do. And fair play to them. They have a plan. So let's see how it transpires. And if you're interested in the book, there's the book Britannia Unchained. It tells you all about what their plans are. Interesting, eh? I hope you found that so. Okay. Let's move away then from the political side of things. You've got plenty to read about the impact of the spending changes, etc. and you can certainly read about the taxes. If you're doing your CMAP exams, don't worry about it at this stage. The LIBF won't get round to changing the syllabus till next year anyway, so you'll still have the existing tax sheet. You know, the 2022-23 tax sheet is what you're tested on, so that's all you need to be aware of. So don't worry about changing everything or going back through taxes and working it all out. We'll do a couple of videos probably next week on it to give you a few ideas of what's going on. Let's go on to my next topic, which I've entitled A Mortgage MOT. And we've talked about this a few times before, a mortgage MOT. So I'm going to head back over to the whiteboard for this one because I want to give you a few ideas on this one as well. So let's just give ourselves a bit of space here, shall we, on our whiteboard. Hope everybody's well. Hope you're all doing okay, enjoying the autumn. Holidays all over now, aren't they? So we're back into some hard work for the autumn season as well, particularly if in the mortgage markets, quite a lot going on now. Interest rates, of course, going up. You're probably dealing with lenders with all sorts of issues around their rate caps and all sorts of things. So let's see if this might help you to produce some more business. I call this the mortgage MOT. Now, I've used the phrase before. Mortgage is what you talk about. MOT, people can all relate to because that's, have a car, you have an MOT. But you need to give it a subtitle. It's your chance to upgrade, this is the big word here, and look at some refinancing. So they're kind of like the inquiries that might help you to think about, taking this meeting on. So what happens here? What's this all about? Well, what I'm saying to you now is that you need to get your CRM system. Now, your CRM is your customer relationship management system that has all of your clients on there that you've dealt with over the last few years. And you'd be contacting those people and offering them an MOT. You need to book their annual MOT, your chance to upgrade and look at some possible refinancing. That's the psychological sales, if you like. It's a powerful word, upgrade. Refinancing is powerful. It's FOMO, fear of missing out. So that's the lovely one I like to use, the fear of missing out. So that's how you sell it. So book it up and get them in for a meeting. Do it online, do it on video. It all makes sense, doesn't it, to do so? Now, once you've got them sitting down with you, what you want to do is talk about refinancing and then upgrading. So what refinancing options have you got? Well, just to put it up there for you, refinance. And that, by the way, is the word we use now. It's quite modern. It means an awful lot of things. So first of all, if they've got a fixed rate, you might want to look at giving them a new fixed rate mortgage. Or, of course, you might want to remortgage. These are going up naturally, so you might want to be able to sell that to people, get them a good fixed rate as well. At the same time, you might want to look at paying off any government loans. Any Help to Buy in England, Wales, Scotland, of course, have their own government loans. These are the equity loans that the government have given people to help them. You might want to think about paying those off because they've got to start to be paid soon as well. If their loan to value, of course, has improved, so a bit of a smiley face there, the price of their house has gone up, their mortgage has stayed the same, so their loan to value has got more competitive. You might be able to remortgage to another lender and get a far better deal all round. Better rates, better deal. Because they, as you know, they give people much better deals the more efficient the loan to value is. So get them to value their property, head on to Zoopla or whatever they need to do, get an up-to-date valuation. People have always got an opinion, haven't they? And while you're at it, have a look at any unsecured credit that they've got as well. Do they want to consolidate any unsecured debts that they might have? Credit cards, store cards, whatever it is. Obviously subject to affordability. You might want to look at throwing that into the mortgage debt itself. Monthly payments much lower. There's obviously issues around that. Of course there are. You've got to give the best advice. Of course you do. But these are just opportunities to refinance. So these are things you talk about. Now on the other side are upgrades. And I like upgrades. I just love the phrase, isn't it? An upgrade. Here we go. Now upgrades are what people used to do with their phones when the contract came to an end, didn't it? Upgrading. So what you can do here is a few things. First of all, have a look at things like lasting power of attorneys and wills. do those need to be upgraded or even done for the first place? And you should have somebody you refer to for that, because it's good business as well as the right thing to do. Is their protection still relevant? So did you sell them protection? Have they still got some protection? Is it still relevant? Do they need some more? Does the income protection plan need changing because their salaries changed? Do they need to look at the amount of protection? Maybe they've got some more kids or something coming along. So you need to upgrade their protection. Maybe take a look at something like relevant life assurance. If they've got their own limited company, if they're an owner director, they can obviously get it through their limited company and get some tax benefits on the premium. That's something to look forward to. Maybe some sort of group plan as well. And while you're at it, take a look at their home insurance. Make sure their home insurance is fit for purpose. There you go. It covers the right amount of money. Let's move across here so you can see that. It has content. If they haven't got any, make sure they get some as well. So all these things can be upgraded. That's all rather lovely as well. While you're at it, have a think about your commission. A lot of people, advisors, are getting a bit worried about possibility of people cancelling their direct debits for their protection policies. Now, you can go for what we call non-indemnity commission. This means that you get paid commission in smaller bits over a period of time, rather than the big one-off lump sum that can be clawed back if they don't keep their premiums going for a couple of years. Non-indemnity commission, if you have enough of it, is a jolly good income stream for your business. So take a look at that, maybe upgrade how you actually receive your commission. And while you're at it, maybe upgrade your fee structure, because customers, of course, have to pay fees for this sort of thing. It's not a free world. Obviously, the MOT might give you a remortgage in which you might earn a prop fee from it, maybe some more commission on some insurances. But you are a business person. You are whole of market. The reason you sell or you have fees is so you can be whole of market, because there's quite a few lenders that don't give prop fees and you can use them, whereas brokers that don't charge fees won't use those lenders because they need the prop fee. That's how they feed themselves. So you can justify your fee based upon that. You are whole of market, and that's the benefit of using you. There's nothing wrong with charging a retainer. Lawyers do this all the time, where you charge a fee to have your services each year. So be it monthly, annually, whatever you want to do, have a fee which allows the customer to use you every year, every 6 months for an MOT and a refinance, look at situations. It's nice, people like it. They know, therefore, they've got your time whenever they need it, and that's important as well. So that, my friends, is an MOT and an upgrade. I hope that's been useful for that one. Well done. Okay, so yeah, useful couple of techniques there for you to help you in your mortgage business. As you know, I'm all about helping people in their mortgage business. Now, I just want to leave you now with a quick little story about your own business and how you run things, whether you are somebody who is running their own show with advisors working for you, or whether you're on your own. Now, Shelley and I went off for a walk a couple of weeks back in the Cotswolds. We live in Cheltenham, and we've got some beautiful countryside around us. And we mapped out this walk, and we were wandering along nicely through the valleys and the woods and the hills and the Cotswold villages, all very beautiful. Until suddenly we stumbled across a blot on the landscape, and we saw this sign. I'll share with you the sign, see what you think of this one. It's a great sign. It's a really good sign, this one, and you'll like this one. Here, I'll show you a picture. We stumbled across this sign. It said danger. As you can see, of course, there's a few woods there as well. And I wondered what on earth this was. And it was a quarry. I didn't even see it coming on my map. It was a quarry, an enormous, great big sandstone quarry. And I thought, oh, I'll have a look at that. But I couldn't get any further because you can see from the picture there, I couldn't get across the tree, through the brambles. There was a huge, great fence there anywhere. But a few people had tried to cross through there. I thought, I'm dying to have a look what this is about, because I was intrigued as to what it was, until I focused this sign here. It's a danger. Quarries are not play areas. Stay away. People have obviously died falling down the cliff there, haven't they? So anyway, wandered across. I was really intrigued to get in until we came across this purpose-built platform, which literally, as you can see, there's a brilliant viewing angle. You can see the whole of this fantastic quarry. Just zoom in there so you can see exactly what was going on, because I was intrigued. But Shelley wasn't too bothered about it, but I thought it was brilliant. I really wanted to see more about that. Now, the point behind the story is that the site owners cleverly realised that people wanted to see the quarry, and rather than struggle through the woods and fall to their death and cause insurance claims, they thought they'd just build a platform and let people look. And that's the point, you see. If you have change in your business, if there's anything going on in your business, you can either fight it or you can work with it. So, for example, if there's a lot of people in your business who want to have hybrid working, who want to work from home, you can either fight it by telling them to stop being silly, come back into the office. That's where real work goes on by real tough people. Get on with it, kind of thing. Or you can work with them and maybe allow them to work a couple of days, or to let them do virtual work rather than just in the office. So either fight it or work with it. I know you might have a few people talking about quiet quitting, which of course is the fad at the moment. Quiet quitting. It's been going on for years. We just call it quiet quitting. Now you can either fight it, stop being so silly, don't be so ridiculous, come back in, you're paid a salary, just get on with it, and be happy you got to work. You can either fight it or you can work with it. You can work along it by maybe examining your management style. Maybe your culture is causing people to do quiet quitting. You could, for example, have tech. You might be battling against the need to see customers on video. You might say, well, face-to-face is where it's always done, always has been. So get them into the office, or we're going to see them in their home. Because you might want to work along with that by embracing technology to help you talk to customers via video. There's lots and lots of examples where you can either fight the change or you can work with it. And the story of my quarry, as you'd appreciate, is the quarry guys were actually working with the problem that they had. Now, what I can't understand, of course, is why did I miss it? There's the map. And you can see from the map where we were heading. We were wandering our way through Baggendon, through the beautiful hills and the woods, etc. And as we were walking down there, we came across this quarry. There is Dagleyworth Quarry. I didn't see it, completely missed it. And they made us move along that way rather than across the quarry. Now, if there's a picture of a zoom in there of the Google view of the quarry. You can see it's quite a blot on the landscape, isn't it? As you can probably see. Why did I miss it? Well, maybe I was using technology. Maybe I should just go back to a paper map. That might be the best thing to. I would have seen it there, wouldn't I? But a useful story to share with you some ideas about moving forward. Great. All right. So we've been talking for 25 minutes or so. Hope you enjoyed the live stream again. This goes out as a podcast, remember. What's going on in our world? Well, we're very busy dealing with a lot of corporates at the moment. We're doing a lot of live training, online live training using Vimeo, teaching BDMs to sell well. We're teaching mortgage brokers, mortgage advisors to turn appointments or leads into appointments, how to fact find. We're doing lots and lots of online training. So if you're looking for that for your team, just give me a call. Happy to help. See if we can help you along the way. Mortgage training via CMAP is still going on. Got the boot camps now rolling along. We've got the mortgage CMAP bootcamp, protection bootcamp, and the equity release bootcamp. All videos on there on demand for you to come along. Cost effective, keeping our prices pegged as much as we possibly can, because I think that's the right thing to do, because we don't visit offices and do training that way anymore, so we can keep our prices competitive, but give many people the opportunity of the training. All good stuff, eh? Anyway, we'll be here next week, next Monday. Hope you have a fantastic week. But when you hear doom and gloom, by the way, the market's plunging. The BBC are going to talk about tempests and locust infestation because of Kwasi's dash for growth. The fact is, he just wants to grow the economy. There's nothing wrong with that. Anyway, on that note, I'll see you all again next week. Bye for now.